What's going on, guys?
What's going on, man? How you doing?
I'm tired. How about y'all?
I'm still recovering from the weekend.
Yeah, it took me an extra day to do that. My weekend.
Hey, hello.
What's going on, P Money?
Man, I've been sick, man.
Oh man, I hope you get to feeling better.
Yeah, how have you guys? Have you been trading?
Nah, market has been so slow. There wasn't something that it wasn't something worth it to me to go take a chance.
Man, I felt like last week on gold, but I was sick. I could have been hitting on gold, but I was sick.
Yeah, no, the market has been there was a lack of momentum for me last week, so I wasn't even interested in trying to get in. And most of the things I was seeing was if either we didn't get any kind of news, the market just wasn't really moving. So
Yeah, that's what I'm doing now.
What was Powell's news today? Didn't Powell speak today?
Yeah, he did.
And what was that? I didn't even see the results of that.
He was speaking about just the economic policy that's been put in place currently. And so that gave the market some jumps and jolts. And then another one of the members from the committee also spoke. So
it's a lot of sideways movement today.
It's been sideways movement for the last couple of weeks.
Boring.
Powell said he only gets paid $190,000.
I don't even know why they asked that question. That was a silly question.
Wait, what?
Yeah. They make a lot more overall. So them guys gonna be okay.
Tax slips all over.
Hey, can I share my screen real quick?
Sure can. Floor is yours.
Can you see it?
Mm-hmm.
So on gold right here, market structure is like bearish. I'm gonna go from bearish, and on the 15 minute, I was kind of confused because sometimes like I see like this zone is pretty big. When it's a big zone like this, it's like I want to pull because I get confused when I start doing this on a big zone. Like it was confusing me. And then go down to the 5 minute, I see it. If I go down to the 5 minute, I see it chopped. So this is like a 5 minute supply zone. And then it kind of respects it, but it just doesn't. It's going to end up coming back up. But I just wanted to ask you, is this for a single candle supply zone? Would you pull this one right here, or would you pull this one? I mean, demand zone, I'm sorry.
No, I'd pull
for a single candle.
For a single candle, I'd pull this one.
Wait, so which one is that one? Which actual candle is that?
The extreme candle. This the candle that made the lower low. That's the extreme. So for the single candle, you have extremes and you have decisionals. What you're talking about are decisional candles.
What I'm talking about is what candle?
Decisional zones.
Because I was thinking like the last down candle before the up move.
None of those. The actual last down candle before the up move starts here. That is the very last candle before it made this entire move.
Isn't it this little candle right here?
No, because it made the up move starting here. It made a pullback here. Then it made an up move, pullback, up move, pullback, up move, pullback, up move. So the very first move would be this one. That's your extreme.
Okay. And now, okay, I understand that now. So now where's the actual down candle that made the up move? Where is that one at?
That one.
Oh, it's this one. Got it. So with this one. So this is the last down candle. What? Okay, I thought it was this one though. Why is it not this one?
Because that's not the candle that's originated the move. It's not the start. That's not the start of your move going upwards.
Got it.
You made a lower low here. Everything from this lower low to this higher high is a move. This is the very first candle. That green bullish candle is the very first candle where it stopped the downward move, started your upward move. You keep picking this candle, which was inside of a move that had already started.
Yeah.
That's this is an in-between move. 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 So you have a decisional here. 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 They overlap. All those were decisional moves.
Okay. Yeah, because I like to like sometimes when the chart is sometimes like when the zone is super big and I see like when I woke up I seen price already like coming down like right here. I would like to pull just a single candle because when I do like this, it just like confuses me like, okay, where is it going to stop at? But if I would have did this, I probably would have caught this buy right here. Well, I caught the buy. I caught it late. I caught it like somewhere like right here or something. But I would have caught it like down here if I would have, but it's just that I didn't get it. I got this move. I got like 3R. But I could have had more, but I didn't. This 4-hour right here. I didn't pay attention to this. But okay, that's what I wanted to oh no, that's the pile move. That's a lie. Where is it? Yeah, right here. Okay, well, thank you. I just wanted to know that because I thought this was the last candle, but I'm like, it's kind of funny. But I say this, I guess it's this one. All right.
It goes back to market structure, bro.
Excuse me?
It goes back to market structure. You have to know when the move ends and where it begins. All these things, all these concepts relate back to market structure. So if you have fuzziness in market structure, you're going to have fuzziness in everything else.
Yeah, it obviously ended here because nothing passed here. Right?
No, because that's the lower low point.
Yeah, the lower low, like, so nothing passed here. So it's the lower low. It obviously ended here. Yeah. Okay, I was just always thinking the last down candle. That was so I always just was thinking the last down candle before the up move. So I thought it was like this. But obviously wrong.
Nah.
All right. Appreciate it. That's what I wanted to know. Do you like if well, obviously for gold, I know you traded gold several times. When is the last time when will you stop taking trades on gold? Around what time?
What time?
Yeah, like I'm done with it.
Whenever I'm done for the day.
Oh, because I know like US 30, you used to stop taking you wouldn't trade like after a certain amount of time, like 9 a.m. Pacific time, you just there's no volume, you would stop trading.
And I stop trading when the volume is on low, any of them.
Oh, okay. So it's okay. So you don't just stop taking trades after a certain time?
No, it depends on when I expect for the volume to decrease.
Because yesterday I had a sale right here yesterday. I had a sale right here yesterday, but I'm like, well, it was 7 a.m. I don't know. I guess it was just ranging because I'd be on the computer like at 4 or something. So I just thought like, it's messy today, but I ended up doing a little something. Some right here. This zone is a type of supply zone. It's hold on, what is it? A range-based supply zone right here. Or what was it? Like a
No, not really, but not really.
what type of supply zone is this?
Structural one.
Oh, it's not a range base.
It's more structural than it is range based, but they're pretty close. So I mean, there's not much different. It broke the lower low, and you pretty much pulled it at the lower low to the lower high. So it looks like a structural zone to me.
Okay.
I guess it could be a range base depending on where you're pulling from, but they're very close together.
Got it. All right. Thank you.
No problem, bro. Whew. Sorry, guys. I'm tired today. Calvin, you got any questions for us today?
Yeah. Yeah, man. Do you mind if I share my screen?
Sure. Go ahead.
I just had one kind of overall question. And I didn't want to start back testing until you could look at this.
Okay.
Or just have a look at it. And the other main question was, we cleared up, and in terms of like order flow shifting or chalking, you said it's best to just use structure and just kind of scratch the S&D when it comes to that. Just use the structural points, like for example on gold.
Well, I mean, if you're just using S&D by itself, a lot of times you're not taking into account structure. And so what I see people do often is that they don't include structure when including S&D. They go off of what they see S&D zones, but structurally price is going against them. They end up just taking losses, catching a falling knife most times. So if, like I said, like just how P Money was looking at extreme and decisional zones, if you didn't have a sense of where structure was, you would miss and think an extreme zone, a decisional zone was actually an extreme zone because everything relates back to structure. Right. Structure is a form of direction. Supply and demand zones are points of reversal. So you can't really substitute the two. And then some people like to use S&D zones and say, you screw structure. So it works for some people. For the most part, it doesn't, though. For most people, it don't, because they need some sense of direction. So if you choose direction to be your compass, or even if you choose liquidity to be your compass, right? You have to have some sense of direction. And then the zones have to serve a purpose. The zones serve a purpose of a reversal most times. You expect price to come into a zone and leave out of a zone, which means that's a reversal zone.
Right.
So,
like right now, this would be my supply. Or actually, it would be this whole thing.
Okay.
Technically.
Mm-hmm.
But I chose to not get involved with any of this. Obviously, this just looks terrible to me.
Yeah, it's pretty bad.
I don't plan on trading at all, but I wanted you to take a look at this plan. But that question came in because, like, previously what I would do is pull something like this, right? And that to me would be, the nearest demand that was broken. And although it kind of worked out in this, this would be the structural, but sometimes feel like there's more opportunity if you're taking S&D, right? But I feel like it's less confusing from a structural standpoint if I just take the structural like chop.
Well, both of them are S&D zones. They're not anything different. It's just the way that you decide to pull them. One of them is an internal structure. The other one is an external structure. That's the
So
only
yeah,
difference.
this is just substructure, and then this is external.
Yeah. But like for P Money, he said like for him, that was confusing for him to pull the structure. But technically, if price comes anywhere into your structural zone, you can take a trade off of any of it. Doesn't matter. Whereas some people, they just particularly prefer wanting to find the most refined zone that they can pull. That's it's a matter of personal preference.
Yeah, like I would keep it to this.
But technically, if price comes out of it,
It's still
and
in supply.
it's still in the same supply zone. And what that means for you is that you still could take the trade, but sometimes people tend to forget that, right? But price doesn't have to come into your very small extreme or decisional zone. And by pulling extreme or decisional zones, you have to recognize you're either A, going to have a lot of zones broken, or B, it's going to miss you a lot of times. So you have to decide if that's okay with you. Does that make sense?
I got it. Yeah. Yeah, totally. And just keep it kind of the same, right? As long as I'm consistent with it, it doesn't really matter.
Consistency is the key. Whatever you pull one way, you have to keep pulling the same way over and over again.
Right.
Because if y'all keep doing things that are, different each time, you're going to get different results. Sometimes it's going to work, sometimes it's not.
Right.
So.
Got it. Okay. And then one quick thing I wanted you to have just take a look at this.
Mm-hmm.
I only kind of did the bullish side and I spent some time on it to where it didn't seem as confusing as to me. I feel like this one flows a lot better than what I had before. So it starts on the daily, and like I said, I only have the bullish side done. And I have the trend phase first on the higher time frame. And if I identify the bullish trend, we're making higher highs, higher lows. The next thing I ask is price moving corrective or impulsive on the daily? And if I have corrective, then I need to go down to the 1 hour. And I ask myself the question, is the 1 hour order flow moving bearish and in line with the higher time frame corrective move? If the answer is yes, I ask myself first, before anything, has price tapped into a higher time frame demand and shocked? Because that would kind of, and if it has, then I need to kind of switch my bias, right? And the blue box. If not, I have the if and when. I kept these kind of the same. Price taps into my supply, drop down. But I think this was the biggest part, like this middle piece was what I was missing.
Yeah, I would say so too. Because depending on what the move has, if it's a corrective impulsive, you need to change it certain ways. And then, like you said, if it price taps into your demand is where it changes. It always changes your trend phase from corrective to impulsive. That's the whole point of a demand zone or a supply zone. It's a reversal structure. So yeah, that looks good to me. Yep, that looks good to me.
Okay, because this kind of just like it's just kind of one big circle, like, right? Like this would be refer to the blue, and then now is 1 hour order flow bullish and in line with the impulsive. And if it's not, I just wait until it is. Just kind of until further notice. But if it is, then I can continue to pull. Obviously, the POI rules are still over here. I did add these in. If higher time frame corrective, your trading time frame supply must have broken the most recent lower low or higher low. If higher time frame impulsive, your trading time frame demand must have broken the most higher high or lower high. Or should that be higher high and higher low? Higher, wait, I don't know. Yeah, it should be higher high, higher low. Should be. Do you think any holes?
If your TTS slot supply must have broken just your most recent lower low.
Time frame supply must
not lower high.
broken the most recent lower low, just lower low.
Yeah, you don't need lower high in there.
Right.
And if your higher time frame impulsive, it must break your higher high, not your higher low. Yep.
Now I gotta spend hours, right? You said like 200 trades.
200.
Asking myself if I followed the plan.
That's where it tends to start really clicking, and you'll know your plan without even having to think about it.
All right, I'm gonna have to do that over the course of a few days, I think.
Oh, that's gonna be more than a few days.
Yeah, that's like a couple of weeks.
That's a couple months.
Couple months.
That's
Okay. That's all right. I'll get it done.
you might luckily if you could do 5 to 10 trades right a day.
Yeah. Okay.
Times that by 5 days a week, that's anywhere from 25 to 50 trades.
You think I should?
And-
I'm only looking at my when I wake up and when I come, when I come to the charts, right?
Sorry, say it again.
I'm only looking at my trading window, right? I can't take into account London because I'm never going to be trading that. Like, you know-
I don't believe in that. I believe that you should practice on London or New York
okay.
because you need just the experience of following your rules. And then if you want to simulate what you're actually going to do at a later date, just focus on just taking trades in New York. But the whole point is your plan shouldn't change just because you change trading systems. My plan doesn't change on trading trading sessions.
Gotcha.
My plan's the exact same. If I want to trade Tokyo, my plan's still the exact same. Like it's not about my plan changes. Plan's supposed to be universal. It's supposed to be a cover for all things that you possibly can run into. So
Okay, cool. That clears everything up.
mhm.
And
But the
so-
goal is to get enough trades of practice to the point where following your plan is something you could do even in a state where you're possibly tired or stuff like that. That's the whole goal of you write the plan so that you follow the plan. You don't write the plan just so you have it. So
right. It's supposed to become like muscle memory, right?
exactly. That's the whole point. So you want to be able to follow the plan without having to think about the plan, because when you're trading, you get split second moments and such like that. So
Yeah, definitely. Okay.
Hey, Calvin, what pair do you trade?
It's usually just either US 30 NAS or EU, really. That's
Or
about
what?
it. I trade US 30 NAS and EU.
Okay, just US 30 or NAS. That's cool.
Yeah. And Euro USD.
Oh, nice.
That's all the questions I had, really. No, I gotta go dig my head into the screen.
good stuff. Any last questions y'all guys got?
No, that's it. That's it for me.
Awesome.
Yeah, clear.
All right, guys. Good luck to y'all in your trading this week. Be mindful today. We have the State of the Union address by President Biden. That's definitely going to cause some ruffles in the market, as well as I don't know what's for the rest of this week. Sorry guys, I did not do fundamentals for yesterday or today because I just was out of it. I don't really see much upcoming to really speak on. Friday definitely will have some stuff between employment and GDP across different countries. The Fed is going around speaking on stuff. There's an economic forecast on Thursday for Euro. That's going to be important. Monetary policy meetings for GBP on Thursday. Unemployment claims will be coming out this week. I mean, the market seems to finally have some shape as to the market volume and consistency. So what I think will end up happening is from here on out, we're going to start seeing the market finally move. I didn't take a trade last week because outside of news, the market wasn't really moving for me. So, and if it did, you get a jolt of volume and then it would slow down. That's not the market we trade. Remember, I don't care how good the setup looks. If there's no banks buying or selling in the market in plentiful amounts, then all your trade's going to do is jump, stall, and probably take you out. So don't do that. Don't trade if there's not a high amount of activity, because none of us in this room, none of us in the Discord, none of us on the internet can move the market like banks can do. Period. Market moves $7.8 trillion a day. And all of the Forex traders that you know that you like, plus all the ones I know and like, plus all the ones that every person in the Discord knows and likes, cannot move the market collectively. We'll barely only do 4% of the entire day volume. That's how minuscule we are. So if the banks aren't in there, you should be in there too. Just keep that in mind. But with that, guys, I will catch y'all again on Thursday. Let me know if you have any questions, okay?
All right, man. Take care of yourself.
All right, y'all too.
Thank you.